Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Tuesday morning, February 26th, with your grain market morning commentary. Currently, we have corn trading 4 to 5 cents better. Soybeans are steady. They've been both sides of unchanged so far this morning, and wheat's about 4 better. I want to remind everybody real quick that Thursday the 28th is the first notice day for March long contracts in the grains. You'll want to be out to avoid a delivery notice, longs, that is. And let's talk a little bit about what has been pressuring the market recently. Wheat especially has been getting hit hard, but so has the soybeans. And there's a few things going on here. Rumors that China is releasing reserves to kind of ease the pain right now until the supply coming out of South America becomes more readily available. And also the USDA's Ag Outlook is projecting that we're going to have normal yields this year in corn, beans, wheat, that we're going to have a record number of acres planted. Mother Nature is going to cooperate and everything's going to be just peachy. So we're going to have big production. We're going to replenish the very tight supplies we have. Now, we know this is all on paper right now and that things are subject to change. So we're going to have to wait and see. While it appears we may be moving into somewhat of a more normal weather pattern, if 2 feet of snow in Texas is normal, but we've been getting a lot of moisture where we need it the most. The heart of the Corn Belt had a bit of a snowstorm last week. We're getting another one this week. So we're helping the drought conditions a bit. It's easing, it's not over. Again, we got to wait and see how things develop going a little more into the spring and through the summer. When we get hot and dry in July, if we have enough soil moisture that the crops don't get stressed, well then we'll get a better production. But again, it's still wait and see there. So we have some improving weather conditions in the Corn Belt. We have big supply projections, and we got supply that's going to eventually make its way out of South America. So the market's been down a bit. But the question I have is, does wheat need to trade the same price as corn? If you look at the March contract there, it's almost at even money, 2-3 cents wheat over corn. If you go out to May, it's still only about 15 to 20 cents wheat over corn. I think this has gotten a little too close, and I've been saying that for a while, I understand, but I just don't see how we can keep the prices like this. We have near record short position open interest in the wheat right now, and it seems like the funds just continue to add to that. And perhaps that's the most bullish thing about the wheat right now, is just that there's so many shorts in there. But at some point, we've seen our demand pick up in export sales. We see demand picking up here, as far as feed usage goes. At some point, something's going to spark a short covering rally. It may be nothing more than a short covering rally, or it may turn into something bigger if we have something to be concerned about with the crop. The winter wheat crop conditions, while they are slightly improved, are still at a record low rating. So I think there's something wrong here. Traders are missing something, but you can't fight the market. You got to wait and see. Right now, the trend is still down in the wheat. I think it's really gotten beat up bad when you see it this close to the price of corn. So that's a spread I encourage you to, at least keep an eye on. If you'd like to talk about it, please give me a call, shoot me an email. My number is 800-826-4124. And as always, remember that trading commodity futures does involve substantial risk of loss. It is not suitable for everyone. Thank you.